Yo, good morning, traders, and welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, or on Instagram, Trading with Kev, and we've got a great episode ahead of you guys. Now, normally on Thursdays, we have Jeev, one of the co-founders of Market, one of the best gold traders out there, join us. Unfortunately, he's not able to join us for this episode, but we will have our other co-founder and CEO of Market in the lab join us, and he's just as good. He's going to be breaking down markets. We're going to set you guys up for success today. I hope you're ready to make some money because Market in the Morning starts right now. Yo, good morning, team. Good morning, everybody. Hope you're all doing well. Hope you guys are ready. We have a post FOMC stream today. Now, FOMC was out yesterday. We had a lot going on. Obviously, the Fed is not just holding rates higher for longer, but the Fed is now leaning on more of a rate hike later this year. Now, we knew that this was coming. If you've been joining us for Market in the Morning, this is not something that really came out of left field, but this really helps solidify that opportunity and that chance of happening. So what we can do is we can come over to our interest rate tracker and take a look at this, guys. It was at a 70% chance of no change. Now we're looking at a 57% chance of no change. The odds of a rate increase are increasing. So be a little careful. Market conditions are going to start shifting from that information. As we saw last year, once we had the idea of a dovish pivot and we were going to have rate cuts, markets were very optimistic and the market sentiment shifted to more bullish. This, along with the tariff relief, gave us a strong bull run. We made all-time highs day after day, and markets were very strong and healthy. At this point, we're starting to see a bit of a mix, right? We're getting a mix between a more hawkish Fed, but a peace rally because of the peace deal with Iran. Now, the deal that came out, we didn't get too much information about it, but it's not really looking like the U.S. won anything. It's looking more like the U.S. is paying Iran for the situation. So we're going to break it down. Let's first start off, guys. What I always like to do when I'm logging in is I want to check our breaking news headlines, and I also want to check high impact. First, we'll check high impact, see if anything came out that is relevant to our markets. Right now, I'm not seeing showing Iranian president signing Iran-U.S. Okay, might be an understanding, a signing of the U.S. understanding. Iran nuclear talks face GOP headwinds amid concerning over economic consensions. Excuse me. Good morning, guys. Blaze, good morning. Sadiq, good morning. Tazi, Andrea, good morning. Sadiq, hello. Hope you guys are good today. Let's make some money. Let's absolutely kill it. It is Thursday. Tomorrow, guys, I do want to mention is a bank holiday, is a U.S. bank holiday. So New York session is closed tomorrow. It is Juneteenth. It is officially a bank holiday in the U.S. No New York session. Most likely no Market in the Morning, just to give you guys a heads up for tomorrow. And guys, if you trade futures, even if you trade Forex, and you're trading a day that's considered a U.S. bank holiday, a lot of times the volatility and the momentum is slowed down. Yeah, exactly. Famous, you got it. Even London might not be worthy to look at. Take the day off, guys. There's nobody saying you have to trade every day in the market. And when we have a bank holiday, that's the best time to take off. Give yourself the 3-day weekend. Enjoy it. Spend some time with family. Get some things done around the house. Whatever you got to do. But take time off. Don't be so zoomed into the charts where your whole life revolves around trading in the charts. You should dedicate yourself. You should give yourself the opportunity to learn and come back every day, but you should also be able to know when to say when. Just like we need to know when to trade and when not to trade. Warsh, that consistent with long-held views. Warsh also absent in forward guidance, not well suited to current policy state. Yeah, not trade exactly. You got it. Not trading is also trading, right? The saying goes, cash is a position, right? When you're sitting cash, means you're sitting on your hands and not taking any trades. So let's hit our search icon up here. What I would like to know, and you guys see I already typed it up, US and Iran, right? So I'm going to look up US, Iran in the high impact, and we're going to see all the headlines that have come out recently that are on these topics to see if we have anything that is progressing or showing us some type of stability. So we have Russia, nothing there. Iran to maintain status quo of nuclear program. US to end all Iran sanctions as part of final agreement. So let's see what else. US allies to draft 300 billion Iran reconstruction plan. I mean, this is wild in itself, guys. $300 billion, right? To put that in perspective, 500 billion, that's half of where Elon Musk is at in his trillion-dollar status. So 300 billion, it's not 300 million, 300 billion is a lot of money. Yo, good morning, guys. What's going on? US-Iran reaffirms pledge against nuclear weapons. That's great. Iran Oman to discuss administration of Hormuz services. Iran-US commit to final deal negotiations within 60 days. Even though they said they were signing it yesterday, they still have to commit to the final deal. Iran-US final deal deadline may be extended via mutual accord. U.S. banks face DOJ scrutiny over Iran's leaders' money flows. There's not a lot really suggesting a push or a pull right now. Everything is still a bit more status quo, and the U.S. and Iran are meeting that deal, finding that middle ground right now. So let's get into some charts. Let's break down some headlines and see where markets are currently positioned. Guys, let me know where you want to get started. We want to get started on gold, the S&P, or NASDAQ. Good morning, guys. What's going on? Unemployment claims. Yeah, so we have good call on that. Good call on that. We have not so much unemployment claims, but we have initial jobless claims. Now, initial jobless claims is just that. That's the people who are first acknowledging, right? First initial jobless claims. So it's something that is a static number. It's all over the place. It's not something that is consistent. It's always just the new people, and it adds to the NFP and unemployment. So we have that in 3 minutes. It is considered a high impact, but we usually don't get that big of a move. I see you guys. XAU, USD, of course, GC. All right, then it sounds like we're starting with gold. We will keep an eye on initial jobless claims, and we will see how that goes. Are we heading towards an intervention? We'll see, bro, Rita, we'll see, man. We'll see. That's a great question for Nil. Nil's always got that on lock. So let's go back into our dashboard. Let's take a look at gold. We're going to come over to GC. Now, whether you trade GC, XAU, USD, you can look at either one on your Market AI terminal. It should give you the same bias, same rundown, and same what's supporting and what could flip it. So taking a look, what's up, Ozzy? Good morning. Taking a look at GC, gold impact, bearish, Fed inflation risks, overweight, Iran deal, and oil. Okay, so great. I'm glad. This is exactly why we use market. This gives me the insight. A lot of people think, oh, the Iran deal, we're going to be bullish on gold now. No, the Fed inflation risks overweigh it. So be very careful there. If we take a look at our gold charts, now here we're looking at XAU USD. We have resistance to the upside. We have support to the downside. But these support areas, as we see, price has not tested these areas yet, other than this one that we hit this morning around 4,200. So at the moment, this is going to be our range on GC, on XAU USD and GC. Our range high, we would look for similar price action, right? So check this out. We swept this high, we reversed. We swept this high that we just created, this new high, and we reversed. Now what I would look for is a similar move. We want to see, can we come up, sweep this high, and give us another bear move from there on gold? So that would be trade setup number one that we're looking at, with that short bias that we had provided with the fundamentals from market. So XAU USD, this would also be GC, same trade setup, same analysis. We would be looking for a sweep of this high, 44.03, 44.03 on GC, and it is 43.80 on XAU USD. Now, to the other side, right, we know we have our support down over here, and we're going to map that out on GC as well, and that's going to be around 42.40 to 42.20 on XAU USD. Support is 42.20 to 42.02. So this would be our last support zone. Now, if we don't get this trade to the upside, that moves higher, rejects highs, moves on lower, what we could then look for is a break below this area of support. So we see that this was support once. It was respected over here twice. we would look for a breakdown and retest. Once we get that break and retest, we would look for our short position. Again, following that general bias from our market terminal, that's been our overall bias on gold as well. On the higher time frame, we see very clearly it's much more to the short side on gold. So 2 trade setups, guys, and both of them being bearish. We want to be prepared and we want to be on the right side. Well, guess what? When we're trading in the middle over here, this is a no trade zone. We have to be able to, as traders, like we were talking about before, for tomorrow being a bank holiday, sitting on our hands. Well, guess what? On an intraday scale, when we're not at one of our predetermined levels, either here or here, everything else is a no trade zone. This is not something that you would want to try to get in long or try to get in short, assuming, oh, we're moving towards the bottom of the zone. I'm going to grab a short before we break down because I want to be ahead of the market, right? We went over this in yesterday's live stream. You never want to be the first to buy. You never want to be the first to sell because most likely you're going to be too early if you're trying to be the first. So this is a game where you'd rather be the second, where you want to wait for confirmation, confidence, so you can take a trade. Again, with that confidence, have a real stop loss, not just a phony stop loss. Imagine taking a random trade here, it moves higher, stops you out, and then it rejects afterwards, right? Stops you out, then it continues lower. You're going to feel silly. Oh, the market knows my stop loss. Now I have to re-enter. You take a re-entry down here. You put your stop loss at that recent high, and then markets do it one more time right in your face. Meanwhile, you should have been able to recognize that we're in the middle of your area. This is a no trade zone in here. So with that being said, right now we want to be patient. And the best thing you can do, guys, is add alerts. I'm going to add an alert here on XAU USD at 43.40. This was an extremely strong area that price has been rejecting over the past few days. And like we said, we saw the rejection from here on Monday, rejection here. It was our high on Tuesday. And then Wednesday, we swept those highs and had a very strong reversal off that Fed meeting. So same situation, either looking for shorts in this zone up here, we're looking for the break and retest down there. So that's what we're looking for on gold today. Let's run through our daily trading bias on GC as well, because I do want to know what's actually supporting this bias. So we're not just taking random trades. Yo, good morning, guys. Good morning, everybody. Hey, hey, ho, ho. Nixon 5, let's go. All right. Iranian drone and maritime incidents around Hormuz sustain regional tensions. Iran and U.S. rhetoric about renewed bombing keeps conflict risk escalated. Yeah, jobless claims. Let's take a look at that. Came out 3 minutes ago. And something I want to point out, like I mentioned before, initial jobless claims is not something that launches the market or gives us extra volatility. And we even see that here on the chart. Look, this is our 8:30 candle. Does this really look like a volatility move? Does this really look like economic data came out? No. Big economic events. CPI, PPI, PCE, unemployment rate, non-farm payroll. Don't get unemployment rate mixed up with initial jobless claims. Unemployment rate, non-farm payroll, CPI, all these other big economic events that I mentioned only come out once a month, so they hold a lot more weight versus initial jobless claims comes out every week on Thursday at 8:30. Let's take a look. Initial jobless claims. Actual 226, forecast was 225, but what's most important for us as traders and market users is our minimum and maximum. Minimum was 215, maximum was 237. Well, guess what? That falls right within the range. We're not expecting volatility from that. Yo, let's go. Hey, Kev finally got back into gold sells. Market gave us the go-ahead. Bro, I know, right? Market, Nalab, and Jeev, we're setting you guys up with some great short opportunities on gold. So let's hit our brain icon. If you don't understand anything in the market terminal or anything in the economy in general, whether it's a headline, economic data, some type of fundamental analysis, what's moving, why, it has the brain icon available. So you can very quickly click that and say, okay, well, what's initial jobless claims? Key input for central bank rate decisions, signals overall economic strength and trends, high impact release, often moves currencies on surprise. So remember, guys, this is talking about on surprise. When we're talking about on surprise, we're talking about being above or below that minimum and maximum range. Now, surprise here, we have forecast of 225. It came out at 226. This is not a strong surprise. This is nothing that's going to shake markets. So we don't really want to give initial jobless claims that much weight, but what we can do is still use our market terminal. So above is bearish on the dollar, which most likely does mean bullish on gold. But again, we have to weigh that in appropriately. If this is an event like initial jobless claims that doesn't give us that big of an impact, then we shouldn't look for that big of a move or follow through afterwards. So we're going to leave initial jobless claims alone for now. We see how it came out, but it's not giving us anything of interest or strong value. So guys, that was our trade setups and what we're looking for on gold today. See what I'm saying? It said bullish on gold, and yet gold is not giving that response. So it's important to look at the economic events, but it's also important to actually know how to read those events. And that's where some of these market TV streams come in and help you to give you that insight, to give you a little follow through. And because we do this every day, 8:20 to 10:30, you can always feel free to join our market TV tab over here and listen as it comes out. Listen as it comes out. Listen to what we have to say while we're covering it. Hey Kevin, how can I switch my drawings from NQM to NQU? So you would have to copy all your drawings and then pull them over. So I could show you real quick on that. So let's go over to our NQ chart. And what I would usually recommend if you're trading on TradingView is instead of using the NQU chart or the NQM chart, use the NQ1 exclamation point. That is going to be the rollover chart. So it's constantly rolling over. You don't need to worry so much about copying drawings and canceling drawings. But let's see, NQM. So let's mark out NQM for a moment, and I'll show you how you would do that. So you would go, let's say this was a demand. Let's say this was a supply. Mark that out. We'll just do the two for now. So you're going to come over to your object tree. I will do a few so that it does work out. Put that there. Just some trend lines and whatnot. Another one right over here. Okay, so what you would do is you would come on your right-hand side, object tree and data window, and you would come down to your drawings. So these are all of your drawings you have out. You would click your first drawing. So you see how it's selected, it's blue. You would hold the shift button on your keyboard and come click the last drawing. What that does is it selects everything in between. And then what you can do is you could either hit Control-C on your keyboard, which is copy, or you can come over here and hit copy as well on the three dots when it comes up. Then you're going to come over to your NQ, and we'll go over to the U chart. And from here, we can paste it. There you go. Now, sometimes because they're different contracts, you're going to get a little bit of different results. So you see how our demand, our key levels, they're all moved up a little bit. So what you would do is you would just make that measurement and say, okay, well, how far is the top of this drawing from where I know I originally drew it, which is somewhere over here. If it was 170 points, let's say it is, we're going to click our top drawing again, hold shift, click our bottom drawing, come over to the three dots, and we're going to go over to settings, and we're going to hit displacement. And let's say it moved up 150, we're going to hit minus 150 and then hit enter. And that's going to move all your drawings for you so you're ready, because the contract rollover happens 4 times a year on futures. So it's important to keep track of that. But yeah, guys, we could go over some NQ. We could go over some ES. We just covered gold. We are going to have Nalab joining us in just a moment too. Hey, Kev, since there's no forward guidance, how do we trade post FOMC? What to look for? So that's a great question. I'm going to bring Nalab on, and he'll also help us break that down too. So Nalab, what's going on, brother? Good morning.
How morning, man. What an amazing week it's been, huh? I just want to start off by saying thank you for doing such an amazing job on the FOMC webinar and live trading session yesterday. I don't know if you guys noticed, we had nearly 5,000 people watching Kevin and Imre break down the first interest rate decision press conference from Kevin Warsh, and as well as guide you through the actual rate decision and the release of the summary of economic projections. So
Bang.
Thank you so much, guys. Like that was such a fantastic stream. I watched the entirety of it. I wish I was on to come and spit some game as well, but you guys had it covered so good that I was just more so focused on trading. And I hope everyone was able to catch those gold sells that we had been talking about. That going into FOMC, the markets are absolute gold market was going to take the dump because we're going to continue pricing in a more hawkish policy. We talked about how the summary of economic projections for this quarter would come out hotter, meaning that the Fed would be looking to hold rates higher for longer and would likely tell us that, hey, there is no cuts plus one base hike scheduled for sometime later this year. So round of applause for our analysis and execution skills. Kevin, if you don't mind sharing my screen right now, I'm going to go through exactly what we talked about. So
let's get it.
Majority of the week, we are consolidating in this range. And I kept mentioning to you guys that, hey, gold is at a very high right now. We have just rallied for the entirety of end of last week till now. And that we're going to see participants start to position themselves on the sell side in order to cover themselves for NFP. Now, would you look at that? Guess what price point we pushed exactly into the upper bands of that we were talking about? 43.75 was the level that we were talking into that we pushed into the upper bands of. So you're telling me right before FOMC, the interest rate decision at 2 p.m. Eastern, right at 1 p.m., 1:30, 1:50, even at 1:59 p.m. Eastern, we're sitting right at 43.78. The level that we were talking about was a very key area for sellers to test and jump in because it's right above the previous highs, right? And that's why you'll see me constantly advocating for you guys to not take breakout trades like this. Do not be a breakout trader in this, like when it comes to setups like this. When gold is pushing up and it's at highs and you try to look for buys, you are officially a cow. You should just be on a field eating grass. You should not be trading. This is the wrong thing to do, right? You are buying at a high. That is the first thing we learn when we start day trading is do not buy at highs. Buy low and sell high. So if you had just sold here, which first of all, just to tell you guys, I didn't sell here. I sold as soon as I saw these next two candles print after the rate decision because all the headlines that came out talking about the summary of economic projections and how the Fed was expecting to see a rate hike even going into next year. Sorry, going into later half of this year. So now that we let's just go to so here, Fed job gains have kept pace and the workflow unemployment rate has changed very little. Okay, nearly half of Fed policymakers see a 2026 rate hike in the cards. Okay, and then Fed officials increase median Fed's fund rate forecast, now predicting 3.8 in 2026 and 3.6 in 2027. That's just a 20 basis point decrease in 2027, right? That's not the markets. Keep in mind, the markets last year were expecting at least 100 basis points of cuts plus this year. Now we're only expecting rates to go down by 20 basis points in 2027. That's crazy change in expectations, right? And you can see how the data that we've been playing and how the data that market has been helping us go through has worked out in our favor with this policy shift. We had 2 weeks ago, we had NFP come out, which we were well positioned in the markets from this sell point. We had sold here. We had sold here. And then by the time NFP and unemployment data came out, we were already deep in profits. And this was one of my best performing weeks, trading mentally wise, not money wise, mentally, because we were so on point in market in the morning, calling out, pinpointing each one of these trades, right? Even this one, this sell that we caught over here, look how deep that ran. So everything was status quo when we saw this pullback. That's why you guys saw us calling this. We're like, hey guys, even though market sentiment on market was showing bullish for gold after we had Trump come in over here talking about peace deal done, and then supporting that bullish bias right before market open when we got the headlines talking about Trump saying, hey guys, peace deal basically signed, right? We got that pushed up into this area where we had previous sellers in the marketplace. You got a push here, you got initial sellers come in, saw this area get defended again. And this is where I want to emphasize, and I've made this clear several times, but since we have new viewers every single day, At times, it will take a while for the market to set up before it continues with the trend. And that's where you will be tested. Is if I enter a sell position over here with the conviction that, hey, I'm looking to target these lows, I know that the market's not going to instantly dump. In fact, it's most likely going to take twice as long to do it because the markets consolidate, they move in a manner that's enticing to get into it, but it's deceiving majority of the time. You really have to pick and choose where you enter your trades and where you enter your position. So, excuse me. So in this case, let's say you had an entry, you got taken out at break even, you re-entered. Okay. So this one didn't work. This one works out. You take some profit here. You start looking for more entries on this lower high, and then you take more breakout here. This type of breakout is fine because it's with the trend, right? And this would be wrong because you'd be buying at the high. So here you have so much more downside. So you're not buying at a low. The low is down here. Here you're buying right at the most absolute high that we printed this entire week. And you don't want to do that. So when I started taking shorts, and I mentioned this on Monday in Mark in the Morning, hey guys, I'm going to look for shorts here. And we took those shorts on gold as well. And then we profited right down to these lows. Okay. Market came back up, took out my runner, break even. But guess what? I re-entered my sell here, and we were able to profit that as well all the way till down here. And keep in mind, we also mentioned taking the buys from here, which we profited overnight going into Tuesday. So we played this range, keeping in mind that we were looking for the sells to align ourselves with the overarching bias over here. So now, after we got this confirmation that, hey, the Fed data came out hot, Fed is going to price in a hawkish policy, meaning that markets are going to price in higher rates for longer. They're going to price in fears of inflation and labor market remaining stable, which means that rates can remain higher for longer. If you now start seeing cracks in the labor market, that's when the Fed would have to take some action. That would be against the current sentiment of what Fed is positioning for. And just because you mentioned Kevin Warsh saying, hey, there's going to be little forward guidance. Do you think he's just not going to talk about anything? No. Dude, forward guidance was introduced in like the 80s, right? That's when forward guidance was introduced. Like they started coming out on live television. They started really pushing to tell you what the Fed was looking for and being more transparent, right? And then, of course, with Bernanke, with Powell, like all these guys continue that forward guidance. Kevin Warsh is going to continue to. He's still going to ask questions in the press conference. Not like the press conference isn't going to exist anymore, right? It's still going to take place, but we can still make things out of the words they say, and you can still make things out of the data that comes out. Hot NFP told you labor market is stable. Hot CPI told you inflation is roaring. Both those things are a tight policy, right? Labor market is fine. Inflation is hot. So what do? We keep rates high. Boom, hawkish policy. Markets are going to price that in, and markets did price that in. So not only did this become a good sell point, but given after the fact that you now realize we are pricing in a hawkish policy, you start looking for those sells. And guess what? We pull back to this previous area. We enter sells here, which, by the way, fantastic sell side position that I also took. And I rode all the way down to the gap fill price points, which we talked about. And Kevin, I recall you talking about this in the stream too, about this gap fill price point that we were talking about. And Imri talked about it too. Imri said that, hey guys, if you're in sells, take some profit here. You're going to see buyers jump in here. Exactly. And guess what happened? Right here near market close right about here, right? Right after market close, we had headlines come out that the peace deal was signed. Okay. So that held a bit more weight going into the open, but the overarching intraday bias on gold is bearish now. It's bearish, and you can see that price action has played out. And we've been bearish since we got this candle over here. Hawkish Fed dots and higher for longer paths spark gold sell-off post FOMC. Fed held rates, but projections show higher for longer policy versus prior dot plot. So that's what I'm talking about, is that they're now talking about a more hawkish policy than they previously expected. So what do we do in this case? We look for those gold sells, right? And we absolutely smashed it, where to the point where a position from here, a position from here, a position back below 4307. and then riding all of that down to 4200s. Now, when you're aligned with the macroeconomics and the data and everything that's going on, you can now take advantage of what's to come in the market. Now, let's say you miss this move, completely fine. What you need to keep in mind that the market does not move in a single fashion. The market moves in waves. Now, would you look at that? Almost 70% of this downside was corrected before more sellers jumped in. Now, I know if I open up a fib, this is going to align perfectly with a fib as well. But you have to keep in mind, we just retested a previous price sensitivity area, previous area where we had price accumulate, perfect retest of it. You got consolidation right over here. You got signs that sellers were coming in, that buyers were being absorbed, more signs to failure to break into new highs. And this is where I started taking entries. I started taking entries in here and then more after this. And then I just held through. I went to sleep. I started snoozing by the time markets were moving. So I had already gone to sleep by the time we were up here. And my stop losses were up here. Okay. So my stop loss being up there, entries here, take profit towards the downside. I woke up when gold was doing this. So I took profit on 60% of my position. And now I'm just holding the rest of the 40% to, of course, our downside target being this, but this is more so what I'm interested in right now for the near term, for maybe end of today, tomorrow. This is what I'm looking to maybe gold could come down to. And I'm not saying it's going to be easy, like straight breakthrough. We could do something like this, and dig into it tomorrow, which is not out of the ordinary. And when you look at that on the intraday scale, what that ends up being, it ends up being a complete correction of everything that just happened since last week, which, as we know, we've talked about this so many times, that markets are going to move on their own pace. You cannot try to time the market. At times it will work, but 90 out of 100 times you will not be able to time the market. So now when you take a position like this on the intraday basis, now let's say I'm in from here, my stop loss being up here nearly like 180 points, and then take profit towards the downside. This is a solid 1-to-5 risk reward ratio on the intraday time frame. And all I did was wait for it, right? All I did was wait for it. But also to tell you another thing, I've always talked about transparency and always like breaking things down. Even when gold came to retest 75 over here, I had taken a position right here. Right over here, I had taken a position again. Same thing in mind. This was another level I was watching, right? This was again the retest of this gap where we previously took the buys on market open, right? That area right here where we took these buys and we rode the buys up from here all the way till 43.50, right? Where we took profit. So I was looking to take those sells in this case and take them sells here because I was like, okay, you know what? We had the hawkish shift in policy continuation. We're gonna get give or take a pullback, we're going to get a play towards the downside. Now, what ended up happening was I was in this position from about 7:30 p.m. Eastern all the way till about 8 p.m. 40 minutes, I got stopped out. And I've mentioned this to you guys before, is that at times for intraday positioning, it will take you more than one attempt, or it could take you more than one attempt to get it right. And now look at this. I got taken out here. What did I wait for next? My next logical area being this level right here. You wait for that. It happened approximately 2.5 hours later while I was working on market and I had the charts open on my side. So I'm still focused and I'm looking at the charts. I'm paying attention to headlines as they come in. I understand that with the break of this area, the headlines that we got last night talking about, hey, the deal is now signed. And we'll just go over those headlines really quickly right now. White House official, Trump signed the MOU with Iran. Iran's foreign minister spokesman, Iran's missiles are only meant to be fired, not to be negotiated. Okay, next headline, where is it? They came out and confirmed it shortly after. The Farsi document is similar to the English one and was signed by the other party, meaning the Iranian president. Okay. So here, the issue of the Strait of Hormuz is the responsibility of Iran and Oman. We talked about this, that they mentioned it clearly that they were going to be the ones controlling it. If Israel attack on Lebanon continues, that will be considered a breach of contentment. The 60-day period today, right? So they were all confirming that they were signing it, that everything. Iran MOU was signed on Wednesday by Trump and Iran president. So Now you have this holding more weight. Now I take a loss here. I lose $900 on this trade, right? My take profit would have made me approximately $3,200. So you can see the risk reward is very positive. Now I'm like, okay, what's my next logical area? This does not, just because I took this loss, does not shake me out of my conviction. Because remember, I'm in profit on the sells I took at FOMC. I'm in profit on the buys that I took from the start of the week and in some of the sells that we took here and the buys over here. So when I keep that in mind, I'm just risking profits. And now because I've taken better setups, I can afford to risk some profits and take setups like this. So now that this is planned setup number one, B level setup didn't play out, boom, X, move on to the next. Now we wait for the next price point. Now our next price point being 43.20s was where I was looking for an entry. Now, if I draw a Fibonacci tool, I know a lot of people use it, and Fibonacci, if you guys don't know, shows up everywhere in life. The golden ratio, 61.8 golden ratio. You can see right at 61.8, we saw sellers come in. And this is the exact 61% retracement in the market, right? As you know, golden ratio shows up everywhere in life. It shows up in organisms, it shows up in biology, in the universe, in the stars, in math, everywhere. So it also shows up in the market. So this is another further confirmation alongside our bearish bias that, hey, Fed projects higher for longer policy with possible 2026 rate hike. So you see that is now pushing gold towards the downside. Hormuz normalization seen taking months keeps conflict risk lingering. Now I know this doesn't shake my conviction. This just gives me more conviction that we're at a higher price point, better sell area. Now I'm going to execute. Boom, boom, boom. Okay. Although I took the $800 loss on this trade in the evening, I woke up to a $5,000 win. And to me, that is positioning yourself correctly in the market. And it's also keeping in mind that you're not going to lose conviction given you take a loss if you're aligned on the right side. As long as you're on the right side of the market, brother, for all I care, gold could again pull back up into here. I turn on the scenarios in market. Gold could pull back up to here or here, and we would still be bearish because that's what the markets are fundamentally pricing in right now. I cannot emphasize to you the amount of people that were in my DMs talking about how gold was going to go to 4,500. You have to keep in mind the Fed wasn't going to come out with a softer summary of economic projection. They were going to come out and put it as real as it gets. Hey, inflation's fucking hot, guys. We cannot cut rates. Stop expecting that. We're not going to cut rates. Equity markets are still sitting at all-time highs, and that tells you something. The markets are just delusionally optimistic. And I keep saying this, that the equity market is different regardless of these catalysts like NFP, CPI, okay? Once the market catches a bid, everything will be used as a catalyst to start buying back up again. Gap gets filled. Guess what happens? We got buyers jump in as soon as we start snapping back above 7,500. And that's a perfect intraday play right there, where you don't have to buy these lows or try to get it low. As soon as price comes right back above 7,500, guess what? You get a quick retest of it and pop in profits instantly. That's positioning. That's understanding that the markets are so delusionally optimistic that it doesn't matter. It doesn't matter if rates are going to be higher for longer. The markets have been catching a bid. We've shifted in structure. We called out the buys from here last week, last Friday, told you to hold it off going into the weekend gap up. We took the buys here live on stream. We held that into the highs over here. And then again, at post FOMC, perfect setup. So when I look at this, I'm not confused about what went on. I understood because I use market. I understand when buys can switch, when sentiment can flip within seconds, within minutes. We see Flipwatch come up. Flipwatch talking about Iran signing the MOU and how this may hold weight, right? This came out 14 hours ago. Now, when I look at this, it did hold weight. It held weight so much that it took gold all the way, nearly 70% correction of this downside play. But the underarching macro bias being bearish on the day trading time frame tells you that gold has a higher likelihood of seeing this range fill towards the downside, right? Kevin, what are your thoughts, man, about everything I just said? I just need to drink some water. I'm like parked there.
Bro, you're on a roll right now. I mean, you've been on a roll for weeks now. You've been calling out some amazing gold setups. I mean, if people aren't in this live stream, they're really missing out. Not only do you guys need markets to give you that strong fundamentals, give you that backdrop, some strong actual confidence in the move that we're seeing and the reasoning behind it versus just the technicals, but to join these streams, to gain that extra education, and to also find these such fantastic setups, man. Kudos to you. Fantastic.
Thank you, bro. And to everybody, not only the CEO, founder of this beautiful platform, I've also traded in the financial market since I was 19, 20 years old. I'm 28 now. I just turned 28. So I've been in the markets for 10 years. I've made horrendous mistakes. I've lost nearly $100,000 Canadian across over 8 years before I made any money in the markets. So I've been through the pain. I've been that naive 20-year-old kid working a minimum wage job, trying to make money in the markets. Okay. I've been through that pain. I understand what it's like to try to piece money together to put into an account so you can trade it, or piece money together to buy a funding account challenge so you can pass it, right? You are not going to speed up your process by jumping to different strategies, or by risking 10% one trade, 30% another trade, or just taking and doing things wrong. You're only going to make money in trading by doing things the right way. And that's both from the psychology and the execution part, but also from knowledge and knowing everything that's going on in the markets. When you are against that, it makes it 10 times harder to be on the right side of the market. And when massive moves like this happen towards the downside and people are left confused, it's even more tough, because I've been on the opposite end where I see a play like this and then I get caught up buying very late, and then I see the sells happen because I have no idea what's going on. So you don't want to be on that side, and what you want to be doing is everything in your ability to speed run your way to success, to make sure that you are putting yourself in the best place with the right tools and people around you that are going to help you become better as a person, as a trader, as a businessman. Regardless, what all of these things require is for you to immerse yourself in what happens in your craft or in whatever skill set that you're embodying. Thanks for the go to top button on newsfeed on a short period after suggesting. Absolutely, my friend. I told you that I told my engineering team that we need to get this out ASAP. And we actually got it out that evening. So I mentioned that, hey, we're going to let you know we're going to get this out. You suggested it. I sent my engineering team a screenshot of your message right away. And within hours, boom, scroll to top button, added. So again, we do this for you guys. Anything you guys tell us, we want to make sure that we are adding to the platform if it makes sense. We're constantly testing new things, and some of these things may not even stay. We like to add things, get your feedback, and we'll sometimes even remove it. There's so much that we have done to market over the past year and a half, 2 years since we've been in business. And it's been because we actively listen to what you guys are talking about. So now let's get back into it. Okay, let's get back into it. So we're in profit on these sells. We're still holding. What I'm really looking for is over the course of the next week for this entire move to get faded out. That in this entire move will get faded out, whether we do something like this, some sort of plays like this where the market's moving in waves and eventually we make our way down, or whether we continue just steadily, something like this. However it happens, because the market pulls back, like even when you look at this area, after we had this peace headline come out, we got this pull back into here again, basically corrected the entire move. And then hot NFP was the catalyst, and hot labor market data was the catalyst to push gold down, complete this range towards the downside, create a new low. So that's what I'm looking for, is very similar price action to what took place here, right? Here, if not, create a new lower low right there. So that's what we still have lots of room to take opportunity of on the downside. Think of what just happened as where we currently are right here, okay? Where we are right here is essentially what's currently happening. You had that initial reaction, retracement, corrected basically over half of that move. Now you're getting that downside towards the previous low, right? Even when you get a break of that previous low, you get another retracement in the intraday where you position yourself from shorts. So similar price action that we're looking for. As I was mentioning right over here, that if we start seeing this, then you know that okay, there's my next intraday entry. But in the lower time frames, in the current time frames, it looks like we recently tapped back into this order block, and you can see we tapped into it, retested it, and pushed right back down. So if this area holds for the time being, we can either, what gold can really do is, and I think this would be nice going into this session, is if we were to like maybe even push a bit higher into here, into like 42.75, if we come back below, that could make for shorts that could play out going into this NYSE session, right? New York Stock Exchange open, right? Or again, if we push further up, like awesome, perfect. Like even on market, if I open up the scenarios, it's even saying if we push up to 43.12 resistance on XEU USD, the CFD for gold, or even 43.50, which was the previous highs, that calls for sells too, right? Or if we just do a continuation break below this gap fill price point support at 42.23 and continue down to our 41.80s level where we have our other previous like price sensitivity right here and here, right? So when you see this, this is a complete roadmap for you as a day trader to be able to come to the market you trade, whether it's S&P, or whether it's NQ. I come to NQ, I look at the market I'm trading, I'm like, okay, there's a resistance here. Once you break above it, retest, continue up to, or a pull back down to this area, or even down to this support where I can align myself with the macro bias, with the geopolitical risk premium easing due to the peace deal, right? So all of these scenarios, bias points, where to position yourself, are here to make things easier for you. Now, when I go back to gold to here and I start now mapping out scenarios, I understand, okay, even if this doesn't play out, let's say you execute here in New York session and this doesn't play out, guess what? Cool. Now, what's gold going to do? Either it heads up higher to a price point like this, and then you get your entry there, and then awesome, your downside is also greater. So guess what? Your risk reward is also going to be higher too in this case. Let's say your risk, or let's say this entry happens somewhere here, your risk reward right there, you still have a solid 1 to 4. Even here, you'd have a solid 1 to 3. The point being that, again, talking about the same thing, sometimes it takes more than once to get your positioning right, but it doesn't matter, because if you're coming to hit the ball with the bat, you better swing each time. You shouldn't hesitate. As soon as, and here's a very key point that I want you guys to drill into your head. And this goes for anything you're going to attempt in life. And you're going to attempt more than one thing in life. You're going to attempt trading, you're going to attempt going to university, different jobs, maybe building a business, and that's just talking about like the finance, wealth side of things. What you really need to keep in mind is that as soon as you let doubt into your mind, that is the route to your demise. There's no room for doubt in the mind, because doubt causes one's own demise. So anytime you hesitate or you let doubt into your mind while you're in a position, let's say you're in this sell over here, and you see price starts pushing up a bit higher towards your stop loss, and you're getting a bit hesitant and you're doubting this play, and then you intervene and market instead reverses and it doesn't end up touching your stop loss, and now you wake up and market's in position and you're chasing this trade now because you let doubt into your mind. If you are someone who's very grounded in himself, in his craft, in his skill set, and you are solid and you do not fall a trap to lower emotions of doubt, losing your conviction, you're also increasing your probability of success in the marketplace, right? So imagine this: you enter this, you set your stop loss, you set your take profit, and you just leave. You just leave because it's at your price point. And this is where what I talked about 2 days ago, was that when the markets are at my price point, sometimes I'll just enter and I won't even pay attention. I'll even like minimize the chart, minimize trading view, because I just have to do other work right now that I need to focus on. So again, I'm going to repeat that once more. And this is from a movie. It's from the movie Gentleman. Matthew McConaughey said this in a quote: "There's no room for doubt in one's mind, because doubt causes one's own demise." And I think that's very true. And it's very true, especially in the market. As soon as you start doubting the position or trade you're in because you're in drawdown, either you didn't have the conviction to start with, or you absolutely do not trust your own analysis, which then goes deeper into, do you not trust your own judgment, or do you not trust your decision making? That's when you have to really focus deeply into your psychology and do some deep introspective work. So now that's what we're looking for, right? Let's say neither of these scenarios play out. So let's say none of these scenarios play out and we don't get that sell off. And actually, I'm just gonna have it drawn out just so we can keep it in mind. So either something like this, or if we don't get this, then you get a play towards the upside where you get some sort of price action like this, maybe even this, and then continuation towards the downside, right? Let's say you don't get either of these. So we'll just close this for now. What I would look to see next is I wouldn't personally be taking the break below here because the range towards the downside isn't that much, right? It's not that much over here. So, and this is likely to come quick. So this move below 42.20s to 41.80 is likely going to happen within a span of 30 minutes once we get that break below. So what I would be looking to see next is, how does price react to this area? How does it react to 41.70s, right? That's a target that market also has on right here, right? 41.80s, right at these lows. And you can see even the scenarios are saying that, hey, price can continue down to these lows. So how does market react to? Do we see a bit toward the upside, right? Maybe what I would love to see after we reach this new low is price continues back up, creates a new lower high in the intraday time frame, and then you position yourself for the break below this area, and then we go and fill the rest of the range. Do you get what I mean? And now when you start to look at the picture as a whole, what you start to see is a series of lower highs and lower lows being printed. And then eventually what ends up happening is that entire range towards a downside ends up getting filled. And what you end up noticing now is that all this was a pullback after creating new lows after a weeks of just selling pressure, new lows. We're going to get some sort of pullback. Catalyst in this case being Trump talking about the peace deal last week being basically signed. Market open gap being another catalyst with the peace deal, Trump and Iran side coming out saying, yep, peace deal basically signed, right? And then turn of events, hawkish Fed policy, doesn't matter, fuck the peace deal still signed, quick pullback, boom. So now this starts looking like a roadmap that we were talking about last week. And I still have that drawing somewhere here. I'm going to find it. And it's going to be like a told you moment. See, that's that entire roadmap that I had drawn out last week. I was like talking about, telling you guys, and it happened from that price point too, that, hey, if we come up to here and we start seeing those outflows, like we could head back towards the downside. Sometimes I surprise myself, man. Like that's like the fact that we had this drawing and I hit it. I had written intraday roadmap there for a position for a reason, because I knew I was going to come back to this intraday roadmap, and we had drawn this last week. So now that roadmap's looking more and more apparent. Now I'm not looking like a loony character in a mental institution where you guys are like, Alan, why are you looking for sells? Gold's bullish. It's like, buddy, I'm forecasting what's going to happen next week down the line. You guys are looking session to session. I'm focused on my vision. I'm focused on next week, 3 quarters down the line, 3 years, a decade, next 100 years. I'm doing Aikido with time right now. So when I'm now paying attention to this, I'm not focused on when this will play out. All I care about is, hey, if I'm aligned with my roadmap and I'm aligned with market structure, for all I care, it could take the next week and a half to play out. But my position from here and my position from here could still be running and could still be providing me that floating profit. So yeah, just a quick lesson here. Kevin, any thoughts about what we just went over?
I mean, I'd hate to jump off track, but I do want to mention, because we set up a beautiful free webinar for everybody for NFP, and I wanted to touch on that real quick, if you don't mind.
Yep. Absolutely. So, guys, you've never traded NFP like this before. We are doing an exclusive webinar for how to trade NFP, just like me and Kevin walked you through trading this NFP release. We're going to be doing the same. Make sure to join us live. We'll be showing you how to use market playbooks to trade the market you're in, post data release, how to actually look at data. So make sure you sign up, claim your exclusive spot. This will be on July 2nd, live on NFP. We have rented a professional studio like we always do, and you can come join. You can come join Imri. You can come join Jeev, and I will all be there breaking down how to use market and trade data reports so you can be profitable and you understand how to execute, when to execute, and when not to execute, which is just as equally important.
Yeah, beautiful. Beautiful.
So, yeah, Kevin has sent the link there. Make sure you guys go check it out. And yeah, just getting back to it. Thanks a lot, Kevin,
For
again,
sure.
for mentioning that. So again, our one of our roadmaps is our positioning right over here, talking about something like this, or maybe it doesn't have to go all the way to somewhere in here. But I would love for it to take out these highs over here in the lower time frame, push up, and then come down. That would be a great play, in my opinion. But we really have to take things for as they come and as price action prints in this case. So that's what we'll be looking for on gold in this session, given that we have an hour and 15 minutes to go.
Yep.
Now, jumping into US equities and NASDAQ. Again, I mentioned that if you're an intraday trader, your intraday trading opportunity would have been buys right above 7,500. So now let's say you miss these buys. What can we look for now? Now, what I do like is I do really like this 7,500 area. So I know that if we were to come down, let's say some sort of price action similar to this, if we were to come down, maybe take out this low and we come near it, that would possibly be a good area for me to execute those buys. Again, that would create that low, and then you'd head towards the upside back to these highs over here, and then eventually back to higher highs right there. So now I see that that's one of the scenarios that could play out. Now, what if that doesn't happen? What if we just continue and we continue towards the upside? Now, I'm going to open up market. We'll just duplicate this. We'll go to ES. You know what? Maybe what I'll tell my engineering team is maybe we can have different views for like all the different assets you can trade, smaller views. You know what I mean? We'll see. We'll experiment with that. That's what I mean. It's all about experimenting. Life's all about a series of experiments. And that just came to my head, and I'm like, you know what? That might be a good idea. Instead of having duplicate, let me have all these different charts. So when I look at ES, I know we're bullish. I know that either we can pull back, exactly how we're looking at here, or pull back a bit lower. What else we can look for is breaks above here. Again, I'm not the biggest fan of this type of setup because it is being like a B level setup. These are your A plus type setups. So now when I go back to my chart on ES, and we'll just keep this on breaking news. So when I look at this, I understand, okay, there's this level right here, 57.70, 75.70, sorry. If I break above it, retest, maybe if I'm a scalper, that's the positioning I can take in this case, where you could take that break, retest towards the upside, where you have something like this play out. But I wouldn't take the immediate break. Do not take this immediate break. Take something like this when you have a clear-cut range towards the upside. In this case, at least it would be like 20 plus points. You get what I mean? So when that presents itself, it is much more likely to happen than just buying straight up, or just wait till NYSE, see how liquidity grabs come and go before taking a position. But Kevin, if you don't mind just sharing your screen, I will be right back.
For sure, 100%. All right, ladies and gents, you want me to take you off? Yeah. Cool. So I know somebody mentioned, they said a possible glitch. Let's see, let's find that. I found some kind of bug with the chart. Sometimes when you swap between swing to day trading on the chart, if you're on a lower time frame, like 15 or 30 minute, manually, you have to scroll like crazy to get where price is right now. Now, I don't know if this is necessarily a bug. I think this is how most charting platforms do work when you go from a higher time frame to a lower time frame, because what you're doing when you go from, on the swing trading, we're on the daily. When you go from the daily to a lower time frame, think of it like you're holding a magnifying glass to the chart. So you're still seeing this entire period, but on a smaller time frame scale, which will provide more candles. So it does make it look like you have to zoom in like crazy. So let's go from swing trading to day trading. And I see exactly what you're saying, right? So it's like you have to zoom in, but it's not like it's glitched where it's like, okay, it brings your candles all the way over here. If that was the case, then 100%, yes, it's glitched. But when it brings us from swing trading to day trading, if anything, look at that. That just fixed it. So if I was over here, I go to swing trading to day trading, it brought us right back there. So the only zooming in you have to do is really to just get you a bit closer on the view. So we'll look into that a little bit. I'll let Nalab know as well. Again, I don't think this is necessarily a bug. I do see how that could get a little, not annoying, but a little extra, especially if you don't have a mouse, right? If you have a mouse, it's very easy to just scroll and you're able to find your way right back here, no problem. But also, not for nothing, swing trading bias, we should really only be looking at that momentarily. And for the most part, because most of us are day traders, we should mainly be on that day trading bias as well. But just my 2 cents on that. We'll ask Nalab as well what his thoughts and input are on that too. Let's see. You got the menu on the left and it covers. Again, not sure, not seeing what you're saying. What I would say, guys, come join our Discord community. Completely free to join. Let me grab the Discord link one more time for you guys. Join that and leave any messages or questions you have in the main chat. We're always active there too. So take advantage of it. Leave some screenshots, leave some testimonials. Any input you have, we're always happy to help you guys. Here, Nalab is back. Now, let's Nalab his input on that. Nalab, did you happen to catch what we were just
Yeah, I actually did. Sorry, I was replying to a few important emails, and I'll share my screen so I can walk you guys through it.
Yeah.
Okay. So I'm on market, right? Let's cover a few things. So if I'm over here, I can click reset chart view, right? Oh, that's not working. So that's a bug clearly. So thank you guys for pointing that out. And we're going to get this fixed ASAP. So you can see clearly it's not working in this case, and we'll get that fixed for you ASAP. When I'm looking at, however, on day trading, swing trading over here is supposed to be used for, hey, we know that gold is actually much bigger than just what we see here. When we zoom out on gold and I look at 3 months, like what does this look like, right? This looks like a clear bullish trend. So that's what like swing trading is, like a much higher time frame, and then your day trading bias and information all the way here. So that manual scroll bug, I think we recently fixed it, but it must have come back in a recent deployment. So we'll definitely get this fixed for you guys today instantly. I will message my engineering team. But right before we go right into the markets, you can see that the scenario we were talking about, pushing a bit deeper into 42.75, would have been much better in this case than just getting a reaction from here, because again, you had reaction. This was a better sell. I personally wouldn't look to take this. You can, but what you should focus on is, again, focusing on a bit more of these deeper pullbacks, and don't have FOMO, right? Don't have FOMO, because the market is full of opportunities. Yeah, no problem, man. No problem. Like, well, we'll definitely get this fixed. If there's any new or bugs that you guys find, let us know. Or if there's any feedback, let us know. You can always go to market, click this chat icon here, and you can chat with our team. You can chat with me. You can chat with our support team. Our other engineers always watch this. Our growth team. One thing about our team is that we've made it mandatory. Every single person has to do a support ticket once a week. Every single person has to do it, because that is something that allows us to constantly improve on it. Hi, guys. I'm new here. I've added the market extension. I cannot open the brain app. Is it because it is a subscription feature? Yes, brother. So the TradingView extension is only for market subscribers. If you do not have a market account, you cannot use this. You will not be able to log in.
Well, I wonder, he's saying you can only not click the brain icon. Are you able to see the headline?
You see the rest of it too? No, I don't think you can. I think it's the rest of it is blocked. But the brain icon loads as well. So if you want to use that, but we'll get back to that. So looking back to the markets, let's look at this right now. The reason I wouldn't take this is because I don't like this. I don't trust this right now. I think what needs to happen in this case is when I open this, 1 second. When I look at gold right now, I see, what do you see here, Kevin? What do you see that's happened over the past 24 hours?
Clear move to the downside.
Yeah.
Strong move, strength, volatility, volume picking up with it. You know, it's hard to look at that chart and go, oh yeah, I'm gonna buy this low. Let me catch this falling knife right now.
Yeah, exactly. Right. Let me catch either people are trying to catch this falling knife, exactly how Kevin mentioned, or they're trying to chase the sell.
Right.
right? So they're trying to chase the sell. Now, logically thinking, I'm like, hey, if the market does what the market's going to do, it kind of fakes out, it kind of manipulates positioning and then does its move, right? So that's why I was like, you know what, maybe we should focus on scenarios that require a bit more patience, something like this, to take out these highs over here, take out the sellers, late sellers from here, and then sell off into these lows, right? Or we get a bit more higher patient plays, something like this, right? That can play out. Or if we just continue towards the downside, then next week, something like this. Now, when I have these in front of me, now I'm not going to chase shittier setups or shittier trades, like trying to sell this candle or trying to sell this candle, right? I'm going to be more patient. Like, I'm going to wait for price action to come to me. If price sells off from here, whoop-de-doo. What can I do about it? Nothing. I'm just going to chill out because I still have my position running overnight from here. So I'm not in a FOMO state. I'm in an abundant state. I'm in a very abundant mindset. Everything that goes right in my life goes right because I deserve it and because I've worked hard for it. So I know that the market's going to reward me if I just stay patient. I stay focused on what I need to be doing. And in this case, I need to be focused on looking at these levels, right? And paying attention to these levels. Kevin, sorry, I'm just being pinged. If you don't mind taking me, I'll be back in 2 minutes.
Bro, do your thing, man. Do your thing. All right, guys, let's take quick dives into NASDAQ real quick. I know we were just covering a lot on gold. I mean, guys, nobody better than Jeev in the lab when it comes to gold. Killer, phenomenal traders, great breakdowns. And what you guys see isn't just smart people, but you see confidence in their trading, confidence in their knowledge, and confidence in what they're doing. That confidence comes from understanding and knowing what they're doing versus some traders who might be a little bit more new, still trying to figure out their way, who are sort of just strategy hopping. When you're strategy hopping, you're jumping into random trades. You're not confident. When you lack that confidence, you lack that conviction, you will lack consistency. Now, Kevin, did you take anything? What's up, brother? Good morning. No trades over here by me yet. At the moment, I usually like to wait for New York session to open. I really like this area on the NASDAQ we see over here. Now, this was Tuesday of, what was this? Tuesday of this week? Yeah, Tuesday of this week, where we had a 600-point move to the downside on NASDAQ. The middle of that area right over here. Now, again, we could probably put a fib on there. That'll line up with our 50%, not our 61, which would have been nicer. But our 50%, this is an area where price pulled back one last time before getting that last leg for another 400-point move. So seeing that we also had a lot of this, what some people would consider trend line liquidity, where we have a pivot high right here. I'll make that white. A pivot high right here. You see all these pivot highs, right? These are all liquidity runs. People who have been in short positions through this whole run thinking that they could hold it longer. Markets just came back, blew right through their stops. Well, at this point, when we have those sweeps and we have a supply zone, I like to find this area to be an area that price can reject. Now, on the flip side of that, because of some of the optimism entering the market due to the Iran deal, the peace deal going on, what I would possibly look for is I'm still going to use this zone, but instead of looking to take a short in this zone, I might look for a breakout, look for a break and retest of this area to target the next area of interest, which would be near that 30,800. Now, what we're noticing on the NASDAQ lately, guys, ever since it cracked 30,000, really ever since it cracked 29,000, is we're seeing an enormous amount of extra volatility. And like Imre mentioned a couple episodes ago on his Market in the Morning episodes we have together on Wednesdays, is the ATR, the average true range, is extremely high now on the NASDAQ. We're looking at pre-market right here, 40 seconds before New York session opens, and we're getting candles that are 100 points wide on a 15-minute time frame. 5-minute time frame, same thing. We're getting 40 to 50-point candles in 5-minute increments on the NASDAQ. So whereas markets 2-3 weeks ago, you could have maybe a 20-point stop loss on NASDAQ and be okay in 100 to 150-point range. But when we're seeing 200-point ranges, 400-point moves. A 20-point stop loss is just going to lead to you getting stopped out way more times than you actually take consistent trades. So NASDAQ, we're in an area I would like to see us reject now. New York session just opened there. I could also take a look at the S&P 500 as well to see what's going on and where we could look for a reaction. And as you guys know, I'm also a big fan of using the VIX, the volatility index, to gauge strength and momentum in the markets. Now, something to note on ES and NQ is NQ took out these recent highs. So look at these highs right over here. These highs were taken out on NASDAQ, whereas these highs, the same highs that we created yesterday on ES, were not taken out yet. So that's a bit of divergence in a sense that we have more bullish momentum. So what do we like to do when we're looking at ES and NQ? We also like to keep an eye on our equities. Apple had a gap up and is moving higher right now. SpaceX had a gap down to 186. I feel so sorry for the people who were buying at 211 and 220. They are currently down over, let's see, a nice whopping 15 to 20% from their position because they felt like buying high on SpaceX when it reached $3 trillion in market cap. A little silly. That's why it's important not to just jump into hype without any knowledge. Nil, what's going on, brother? Welcome back. I feel like you never left. You're muted.
Sorry, man. I keep getting pulled out. It's such a busy week.
Bro, it's all good, man. You're busy.
But it's for good reasons. It's for really good reasons. We have a ton of exciting stuff coming for our audience, our viewers. Man, like it's gonna be a very hot market summer. I'm telling you.
Bro, let's get it.
And that's on both sides. That's on sides of volatility and us guiding you in this volatility, and that's also on sides for everything that's coming out on market and how we are transforming it into the greatest financial market platform to exist. You know, that's our goal at the end of the day. So now when I'm watching gold here, and remember we had this roadmap that if something like this takes place, I wouldn't want to sell up here, right? You'd want to sell when price closes. If price like was to close back below and then you're getting those retests, like that's your entry point right there. So that's what we need to be watching out for. Or we have our higher setup that we want to take, right? Like that one up there. So we'll keep our eyes out right over here. We'll watch price action. In the meantime, we'll just watch price action here and see how price develops. But that's what it's about. We're at 75. We're breaking right above these highs a bit. So if price pushes up a bit and then, or if just continues to close below here, then we'll see if we can see selling pressure come in and then continue to dig in over the course of the session. On the side of ES, you can see we just broken up there. This is like our A level setup, right? This is your B level setup. So it really depends on what you want to take and who you are as a trader, right? If you're a scalper, you can look to scalp this, but like we just opened, market just opened, and then we could maybe even pull back into here before pushing higher, which would be good, or at least this low, see how we reacted this low. I'm just personally not a big fan of taking these types of buys when price just keeps pushing into these highs. But it's honestly to each their own, right? Everybody has their own trading style. So this is something you are comfortable with, go for it. But I personally like this. If I saw this sort of push down and then buyers jumped in and we're driving price towards the upside, then I would be more comfortable taking this down the line rather than trying to take it now, because then we would have more confirmation. Yes, this is the intraday low confirmed with a double bottom, a higher low. We push up in this range, retest, and then, right? Similar to this, as soon as price broke back above here, we pushed up because we had that range towards the upside. Right now, that's range towards the upside is very thin. Now imagine it from down here. You have much more target room towards the upside. Gold, again, just rejecting that for now. So let's see how this price action just develops right over here. Oil falls to lowest and started Iran war after ceasefire deal signed. Then Yahoo says Israel must maintain Lebanon buffer zone for security. And these guys are not going to leave that region. They are not going to leave it. Iran eases trade vessels curbs at southern ports. Okay, so we see it opening up. Thankfully, my gas tank takes so much to fill up, man. Like I just want oil prices to be a bit lower.
Just so we could cruise.
Just so we can cruise and not worry about the crude,
Yeah. Cruise without the crude.
Cruise without the crude, man.
Yep. Nasdaq, man. What a rejection area
What a
for you
rejection.
guys right off the
Yeah.
open.
Yeah, even ES, complete
100 points, 120 points right there. Yeah, ES, same thing. We had that rejection area, pulled us right down to VWAP. I saw Mr. Jaleel in the comments said ES respecting 75.72, which is GEX 3, right? It's cool to use options data, but it's also important to understand market context and the overall higher time frame zones too. I would definitely say if you're using extra forms of confirmation, an order flow tool, whatever the case may be, options, order flow, like I said, you want to be aligning it with your higher time frame zones as well. Because what you're going to get is you're going to get 1,000 different levels, 1,000 different reactions in the middle, which if you don't have your higher time frame zones, each little move you see is going to be like, wow, look at that, it's holding, or wow, look at that, it's breaking, I need to take this. And that leads to the extra amount of paper cuts, loss after loss after loss, and then it finally hits your zone you were supposed to be patient for, but at that point, you're out of capital. Wow, look at that, bro. That's crazy. 168, 169 points right there on NASDAQ right off the open from 30,000 to 601.
That's patience, man. That's patience, That's what not getting distracted or caught up in just small market movements. That's the type of success that comes when you're focused, you're not in a rush, you're not just trying to. So now gold, look at this. Gold is closing below here, right? Like now, if we observe the coming lower time frame price action and we start moving towards the downside, that tells me, okay, we've just taken out some of these highs over here, like slightly. It's not even that much, but we've retested 42.75. Now, if this holds, or if we just get even this push towards the upside and come back below, that tells me, okay, sellers are in and we're likely to drive price down towards these lows in this session. And then it's up to us to observe how price reacts to these lows, because either two things are going to happen. Either we slice through it, or we get initial reactions, push up a bit, and then later on in the day fall through it. The second option being more likely, because markets more often than not move shitty and they don't move as we want them to move, right? So that's why we have to exercise the same patience, as well as understand that, okay, we would need to break this before continuing lower. So instead of anticipating that break, it would be smart to take some profit here and move this to break even when we break these lows, and then also secure some here, because this is like 300 pips, right? If you're taking a short off this rejection, now if you start breaking lower here, like breaking back below this area, right, or just retest again, like however, create some sort of consolidation period. If this is the play, then you need to wait for this consolidation or breaks below here. You enter that sell, maybe on a retest of this area, and then downside play. Right now, it looks like when you zoom out to the 15-minute time frame, now you can start to see how that kind of completes this entire range, right? Based off this lower time frame price action entry that we're talking about. So if you're looking to take this, then if you get that break towards the downside and this area keeps getting respected, like 42.75, that calls for that completion of that range. And then as well as once this low breaks, then you continue down and fill this entirety of this range. So this would be like positioning going into New York. Like this would be for like the session, right? And how to take like what the move has happened overnight and how to like position yourself accordingly with it. Now, in case we don't reject this area right now, what we can maybe look for is a push towards the upside. Now, where could that push come towards the upside? Again, we mapped it out earlier. Is that one of the other targets we want is this sell. This sell to us is beautiful. We'd love to take it because we took it overnight. So if price was to come back to here, this would be another area where I would go into the lower time frame and be like, hey, I'm going to start observing and seeing how price action develops. Exactly how we're doing right now over here. We're going to do the same thing, is that if price doesn't respect here and we break up higher, that's fine. That doesn't change our bias. The only thing that worries me is that Dixie is going bearish on my support zone. Yeah, that's so if we look at Dixie on a hard time, like look, it's just made a high, and that's
Yeah.
fine, right? That's fine. I'm not putting too much emphasis on that. Like we know overall dollar trend is bullish, so that's why I'm focused more on the positioning aspect of it, right? As we're talking about being positioned in the market at specific price points, rather than just like kind of merely focusing on what's happening right now. So like in this case, if this holds exactly how we were talking about, then you have your downside now, right? Then let's say you take a short on the break of here or whatever, or a bit higher if you have like bigger balls, and you take it a bit higher. Now your downside towards down here is 430 pips. It's 430 pips. It's a 1 to 3.4. Over here, it's still a 1 to 2 risk reward, positive risk reward. And now you're getting that downside play towards the downside if we keep respecting this area. And again, it was the same thing. We broke above the highs, these highs over here. We're respecting it now, exactly how we had mapped it out before, right? Or we wanted the higher setup. Now, if we continue here, that's great because we have our entry, we have our take profit. Now, if we could even do this, right? Let's say you entered over here on the break of this or something, right? Let's say you could have maybe even entered a bit higher here. It all depends on who you are as a trader. If you're someone who is more who likes to take risks, then you can enter a bit higher. You can even enter at the top of 42.75. As I mentioned, if that's in your plan, then that's the price you're looking at. Then maybe that's the entry you take and you just leave it. And that's where it comes with the conviction, or you wait for the confirms. In this case, the confirms we talked about being unable, lower time frame, being unable to break this area. And what that would signal to me is that, okay, we had sellers try to jump in here. We took them out. We had sellers here kind of like, okay, we took them out a bit. We've had this continued selling pressure. Either we get reactions over here, push up a bit higher maybe, and then come back below and get that snap back below sells, or you get that push towards the upside. So you get that push towards the upside, where then again you tap into an area where we know is existent with sellers, where there's active sellers, and that's where that scenarios come into play, right? So now, yeah, we'll just stay observing here on lower time frame price action on how it plays out, and I'll be the first to like tell you to like manage your position, or like if you're in these cells, and how to even like manage it when towards the downside or towards the upside risk that we have as well. So let's just stay tuned. This is what it's about. It's about watching markets, understanding what's happening in current context to what's been going on overnight. What was the sentiment that was set yesterday? How are we bearish? Where can we head up into? Where is our pullback areas? What can drive us there? It's all a story. And it's all a story for us to figure out that allows us to take the most advantage trade with the highest probability setup. We avoid taking shitty moves like this so we can capitalize on great plays like this that are a part of our map, or greater plays like this. Now look at this, okay? Now initially we get this reaction. We're not going to get all giggity because we took a position right over here. We're not going to get giggity because we're still in this trade, right? We're still
Giggity?
we're giggity, like happy, like
Gotcha.
you know.
I thought you were making a Family Guy reference.
No. I'm just talking about like general, like
Yep.
super
Gotcha.
like childlike happiness. We're not going to get all excited because we're in profit a bit. What we're going to do now is lock in. And we're going to lock in because the market doesn't owe us shit. And if you're not, quagmire, right?
Yeah.
If you're not focused, then then the slight profit you're in right now could get completely tarnished if you lose focus and something unexpected happens. That's why we're always watching the news feed, right? That's why we're always adapting. And that same adaptation, played in yesterday in my positioning. When I attempted to sell here, they didn't play out because the signing of the peace deal held a bit more weight, but I executed the sell up here, which I'm still in. And that's why I can then risk a bit more on this play while still waiting for the probability of this playing out. So now that I've risked here, it's because I'm in profit on still 40% of my position that I can use. And even if I get stopped out here for 100 pips, so what? So what? That's nothing compared to what this position made me, because I was aligned with the macro bias that was set by Fed, that was set by Fed Warsh. So do you see what I'm talking about now? How when you just are more patient, you can execute these trades in the lower time frame aligned with the intraday play of driving price down here, which is then further aligned with our scenario that eventually fills this entire range towards the downside.
Beautiful.
So now this picture gets painted much better, and it ends up being just like every other time where we have used fundamentals to play complete intraday and higher time frame ranges. Right? We use it to our advantage. We understand how to position ourselves within the session, as well as when it's not complementary session time, such as like in Asian hours. Like I took this entry at nearly 11 p.m. or 10 p.m. Eastern yesterday, and I was up until like 1 before this move started even happening. So I was aligned. My stop loss was in. I didn't care. Same thing here. My stop loss is in. I'm in this position. I talked about it at the start of the session that this is what I'm looking for. I came to the charts. I executed on it. Now, guess what? I'm looking to target this low here, because now this is just extra profit for me. What I'm going to do in this case is I'm actually going to take off like 80% of the position here. Why? Because this is a B level setup for me. I'm in my A level setup from up here, right? I took that intraday play last night and I woke up to profit. And now I can risk that same profit for this play, take majority of it here, hold the rest of it, take some more off here. And guess what? Maybe later on today, or it's a bank holiday going into tomorrow, right? So overnight, maybe we play out down to here and then that's it. Like we just end the week off right below to these price points, last week price points, or at least we fill this range towards the downside here, which gives me good profit as well. Right.
No, there was a comment here that, if you don't mind, I just want to take and cover real quick. Somebody mentioned if buying high is a no-no, which we know as day traders it is, then the dollar is likely to drop from the high of this year. Now, the dollar did just hit new high of this current year, 2026. That will cause gold to go up if it drops. So thinking gold is going lower doesn't make sense. Now, yes, we don't want to buy high. We don't want to sell low, but you have to look at the context, right? Context is always key. We had an extremely bullish day yesterday on the dollar, given the FOMC meeting, right? So it's not like we just had a random move to this resistance point like we have in the past, which, yes, we did see a rejection. We had context behind this move. So because we had context, this actually does help support more of a bearish gold, because we see that we're moving higher with strength, right? Strength, and again, the context of the overall markets and the fundamentals. Also did mention about, I think, 10-year yields also bearish. Yields have been climbing higher overall. You got to make sure that when we are looking at things like yields in the dollar, as much as we do want to look at like lower time frames too, it's also important to look at the overall time frame, especially if you're not trading it exactly and you're just using it for overall context. So overall context on the dollar, even though, yeah, we wouldn't want to buy these highs, it still wouldn't be an area where it's like we have to go short, when given the fact that we just had so much strength off of that FOMC information. Neil, what are your thoughts on that?
Well, the clearest example of this is that when some sentiment shifts, or there's a big focus on a specific narrative, that narrative can hold weight for a period of time. It doesn't matter if you're really focused on dollar moving down for 10 1-minute candles and saying dollar can't go higher. Why can't dollar go higher when the Fed is pricing in a higher policy path for the next 2 years? When it's higher than expectations, why can it not go higher? Now look at this. Why can't gold go lower? People come here every day for the past 3 months talking about gold can't go lower. Guess what? We've been calling gold shorts from up here. People when we were calling gold shorts here, why were people saying gold can't go lower? And now look at gold. We've been calling gold shorts all the way here. It's when you're aligned with the narrative, and currently this is holding the most weight with when the Fed tells you that they're expecting higher policy, tighter policy going forward, and that they are looking to hike rates in 2026 rather than what the previous expectations end of last year was, the 3 rate cuts in 2026, is that that complete shift in narrative can hold weight, and it just further brings gold and outflows towards gold and inflows towards dollar, right? It doesn't matter if dollar comes down to here and then pushes up. Dollar is still bullish on the intra. Dollar has been bullish since the start of the war. Since the start of the year, dollar has been bullish, right?
Exactly.
When the dollar was being devalued during the pandemic, when the Fed had the most easy monetary policy right here, did were people saying dollar couldn't go lower after breaking these lows? Of course they were. Did dollar go lower? Absolutely it did, because that was the policy at that point. We were in Gold does not drop on every war narrative. It does not. That narrative has changed. No, gold does not drop. That's false. Gold does not drop on every war narrative. You are looking at it in a wrong perspective, my friend. The right perspective to look at this is what it impacts monetary policy. The reason gold has been going down since the start of the war is because how it impacts inflation. When oil prices are higher, there's an energy risk. There's a supply shock. There's energy inflation in play. You can see it shifting down into CPI. That's why headline CPI has been going higher. That's why markets are pricing in a tighter policy. That's why you see dollar seeing inflows into dollar. That's why you see outflows from gold. That's the policy there. Everything trickles down to monetary policy. We've been talking about this for months. So you're looking at it in a completely wrong way. When Russia-Ukraine was happening, that impact on oil didn't last as long. This lasted way longer. The impact on Russia-Ukraine also didn't impact US inflation as much either. So completely different scenarios. Strait of Hormuz, yeah, oil is low now, but doesn't mean that the Fed is not pricing in a tighter policy.
Right.
Like that does not mean when the Fed comes and tells you they're pricing in a tighter policy and you want to go against it, be my guest. But what I'm gonna do is I'm gonna short here, I'm gonna short here, and guess what? I'm gonna walk away $8,000-9,000 profit deeper 24 hours later. That's it. And at the end of the day, I have no emotional attachment to any of this. I'm here to do this. You know what I mean? Like, I'm just here to call out these trades. Now look at this. 200 points. 200 points calling out trades, explaining market fundamentals like I'm a macroeconomic professor, but all I am is I'm a CEO, I'm a founder, I'm a young 28-year-old living life, having fun, living my dream life, having a good time with Kevin here on live. And yeah, awesome, guys. So if you're in profit, take some off. Take some off, target the downside, take some off. You can move to break even, but as long as you remain below 42.72s, we're going to see continuation on downside. So yeah, got you, bro. Got you. So whenever somebody wants to come argue with me about something, keep in mind when you call out plays like this on gold and you anticipate it and you actually call it out live and you show the position you take, and not just this one, but you call out this play, and every single one of these ran thousands of pips and made me over nearly $30,000 over the past 3 weeks, then I'll take your opinion into consideration.
No.
So in that case, I'm focused on my sell side scenarios, and that's what I'm focused on right now. If sentiment shifts, I'll be the first to tell you. But I'm also out here giving my personal outlook on the markets. This isn't financial advice. This is my personal outlook. This is what I'm doing. And I've made this abundantly clear from the start, is that I have a way of looking at the financial markets from monetary policy, fundamentals, macroeconomics. I take it all into consideration. And with that, over the course of the years, I've been able to position myself in the markets. I've been able to position myself here, given that we were given a hot NFP, and I broke it down completely in that live. So when that's in play and the Fed is telling you that the higher dot plots are showing you that that's the narrative and dollar can continue surging, just because we get a minor pullback doesn't mean dollar is going to stop. Yeah, we created new highs, but so what? equities created new highs. You know how many people have been trying to short equities for the past 6 years, and equities has continued to rip higher. So, guys, this is still the roadmap over here, right? Like we're still focused on this gold play towards the downside. Again, this would be a good target. You can move your positioning to break even if you insist. If you're a scalper, I know scalpers are a bit more focused on getting in, getting out. So if you're a scalper, move it to break even and then take some profit if you haven't towards the downside. If you're an intraday trader, what you can do then is position yourself for a push towards the downside. And that may not happen instantly. That may not happen right now, or it may happen later on in today. But as long as we hold below 42.75, you'll get that play down to these lows at least, 42.40s, which is your 300 pips, right? Or you'll get that play right down to here, which then extends it out even further, and that's about 500 pips. So, or 500 points, right? So that's what the play for today has been. And that's what we have been paying attention to and really looking at for the entirety of the week. So hopefully, if you're new here, thank you so much for joining us. Hopefully we've provided you information, good content, good talks, good analysis. That's what we're here to do, right? That's what I'm here to do. That's what you can follow us on socials. You can join us on Discord. You can check out the platform we're building. At the end of the day, there's not a lot of other CEOs and founders that come on live every single day, call out trades, show their positioning, and really break down the markets down to core fundamentals. Like I came in while markets were here, and I told you that I'm not looking to sell here. I'm looking to sell here. And then when the market came here, I looked to say sell gold while people were saying gold can't go lower, dollar can't go higher. So at the end of the day, I'm out here putting my balls on the line, putting my analysis. If anybody has analysis to share, please send your TradingView link. You can click this, click copy link, easy as that. Send your analysis. We'll go over it. We'll give feedback. If you have something, send some feedback, send some analysis. Let's talk about that. But if you want to come and kind of like argue about specific points, there's no point. We're all here to learn. We're all here to share. And I talked about this. Collaboration's awesome, right? Collaboration's awesome. Now, yesterday we had welcome to Piyush World. Piyush World, come in here and tell us, hey, this is what I'm looking for. This is the sell scenario I'm looking for on gold, right? Or this is the buy I'm looking for. I forgot what he was mentioning. And it played out because he shared the analysis. He showed he was confident in it. And worst comes worst, he takes a loss on it and moves on. Best case, he makes profit and he increases his conviction in himself because he shared it. He put his balls on the line to the public, to 300 people watching. So the best thing about this is that, look at this. I'm going to break this down again. Okay. I positioned myself for sells. I tried my sells out here. Didn't play out, right? We went over this. Didn't play out, took the loss because the peace deal signing was holding more weight. I then took the sells again up here, let it play out overnight, had my stop loss, had my take profit towards the downside, woke up, took profit for over $5,000. Boom. Now I'm still holding some of my positioning from here. Okay. And I have a very small runner from up here. Very, very tiny, to the point where it doesn't even matter. It's like floating like $200. It's like it doesn't matter at that point, So this, now we're talking about New York session. We had this play, this range towards the downside is still left uncompleted. We still haven't finished it. We still have that target towards the downside. I didn't like it from here because we attempted it. Sellers attempted it here, right? And then they couldn't drive it lower. They couldn't drive it lower. We got that push. And I'm like, guys, if we break up towards here, and this is at sell point, 42.75 being a psychological level, this is a good area to take some sells. And that's exactly what we did. We waited for it. I called out the sells, and guess what? Now we're floating over 200 pips in profit. And now you have room towards the downside. You can move this to break even. And now, guess what? My confidence in myself increases. And I get to enjoy a very nice dinner tonight.
There we go. Win-win.
Win-win. Win-win. I get to enjoy a very, very nice dinner tonight. Maybe go to some nice like sushi place.
There we go. That's what I'm talking about. Yes, sir.
Omakase. Get some omakase. Yeah, great play, guys. And now look at this. Now what this looks like is just a continuation to fill this range towards the downside that we have, at least down to here first, right? So let's see how this plays out. And again, even if gold pushes up to here, we talked about this, it's all about scenarios. It's all about positioning yourself on the right side of the market so you're aligned. So here, we talked about these two scenarios. Either I want to look for sells from 4320s again, or from here, right? And then I would love to see this sort of selling pressure play out from up here. But let's focus on what we have at hand right now, and which is this entirety of this price action over here. So we just had the new hourly candle, and the last one closed like bullish, but we got that rejection. 30-minute, again, going down time frames, 30-minute rejected that 42.75 area. So now what this gives us is it gives us room now. It gives us room to use to our advantage. Wow. Give me a round of applause right now. I'm going to leave my PayPal next time, dude. Like the amount of money people have made on this stream over the past few weeks. Come on, few weeks, few months. Kevin, thank you so much for hosting this again every single day.
Always.
You're a rock star, man.
Always, bro. It's a team effort, man. Just like market is. It's all a team effort. This stream wouldn't be anything without me, you, Jeev, Imre. I mean, it's strength in numbers, strength in just knowledge, right? Education is power.
Yeah. Trump says oil production is steady. Iran cannot obtain nuclear weapon. Markets are rallying. Jobs reach record lows and inflation is dropping, boosting affordability. Claims U.S. is stronger, safer, and more respected than ever. Dollar up, gold down, ES up, NQ up, oil down. Come on, bro. No other platform does it this way.
Yep.
We're sitting on a gold mine. You guys are sitting on a gold mine for such a low price. You come to these live streams or you watch it directly in the platform on Market TV, and we're constantly coming out with new features. We're constantly updating our platform. We're always listening to what our users want. And man, it just gets better and better every single week. And I'm so, so happy with how, wow, guys, round of a fucking applause, huh? Give me my W. Give me my W's right now. Give me my W's in the chat. Throw the wins. And now we extend our target towards the downside, but take some profit. I'm also going to take some profit. I'm going to close some positioning off, secure some more off for the week. You know, always good to secure some profit, close off strong in the week, especially because tomorrow's a U.S. bank holiday. So take your profits. Beautiful trade called out on Market in the Morning, broken down live while we had people saying that it wouldn't happen. They're always going to try to get us, man. They're always going to try to hate the world. There's always, no, I'm just kidding. Everybody, we're always open to hearing feedback. It's all a joke. We're all just kidding.
That's it.
But there's going to be times people don't want you to win. And guess what? You can't stop God's plan, buddy. I'm destined to win. We're destined to win, you know? That's a mentality I think we all should like really, really have, is that if you come, dude, you should act like you're the main character in your life. Everybody should act like they're the main character in your life, you know? If you're driving a nice car and someone sees it, they're not like, oh man, I want to be that guy. They're like, oh man, I wish I had that car. Everybody's a main character in their life. So use things as inspiration, get inspired by people you're around, inspire the people you're around. And then what it ends up becoming is like, it ends up becoming a growth loop that just works in itself, is that if Kevin improves, I improve because I get inspired by him. If I level up, Kevin gets inspired, Kevin levels up. You get what I mean? It's a growth loop that just keeps looping because you just surround yourself with the right people. So 300 pip target right towards the downside right over here. So called out live, explained beforehand, that's what we're waiting on, executed live, and now we're riding this towards the downside. So guys, thank you again so much for joining us. I have a meeting in about 20 minutes, so I gotta head out by then, but hopefully this hits our downside target as well.
Bang, look at that.
Brilliant plays, guys. Brilliant.
Beautiful, bro. Great call out, great analysis, great trade setup. I mean, just great overall performance, right? Like I mentioned before, guys, it's all about the confidence in what you're doing, not being a little unsure. What about this? What about that? Now having confidence and follow through and conviction. Very important. Know what you're doing. Have good foundation. Use market terminal to gain that access, to gain that insight into the bias, into the levels. We even have the price levels and price targets on the market terminal. Like, what more is needed for somebody to be successful in trading than the market streams and the market terminal?
Yeah. Sorry, just to interject. We were talking about that pullback into these lows. So keep an eye out. Is that if we keep rejecting this, this is where buyers are going to jump into New York session. Like, this is where it's likely to jump in, if not driving lower into here. So if we can even get this sort of play towards the upside from here, like, that's your cue to, okay, if we break out into this lower time frame price action right now, and I see price maintaining above here or some sort of price action like this, that makes it apparent for me that buyers are going to be in here, and I'm going to ride this towards the upside towards 7,600. If this low doesn't, and then of course, like, you'd have your stop loss below this low. If this doesn't hold, then you just want to wait for a deeper pullback into 7,500s. Again, it's probabilistic thinking, right? Where you have these different scenarios and you align yourself in the markets where, regardless, I'm going to execute, but I'm going to execute on the higher probability scenarios. In this case, being I'm going to watch lower time frame, see how it forms. In the case of gold, we did the same thing. This was a higher probability scenario, and we talked about this. Dude, so if you're looking at this, I'm not talking about the next 2 days. Again, this is the last time I'm going to bring this up. Where I've been talking about gold reaching these lows from here and positioning ourselves from it. So I'm not just talking about 2 weeks. I'm not, if gold consolidates here for the next 2 days and pushes up, I don't care. I'm positioned from short from here, and I'm selling these pullbacks, right? So it doesn't matter if it could for 2, 3 days, 4 days. And I've even mentioned at the start of the stream that sometimes it takes days for the markets to set up. Like the sells here, I was in these sells for about like a week and a bit before the market was ready to push down. And then I added up here as well. So it can take time. It's not about timing the market. It's about time in the markets, right? So again, beautiful play towards the downside, scalp called out based on current fundamentals, how we rode this narrative all the way back down, how we even took the sells during post FOMC. Like, this was right when Warsh was speaking, faded out this move, rode it all the way towards the downside. So we do this daily, guys. We call out these trades daily. If you want to come learn. If you don't, I don't care. I don't have to be doing this. Kevin doesn't have to be doing this. We're, at the end of the day, building a software company. You know, we're building a software company worth tens of millions of dollars. And that's what is my golden nugget here. And this, at the end of the day, is just this craft that I learned over the past 8.5 years. So again, this buys that I'm calling out on ES, these could play out towards the upside. You'd want to have your stop loss towards the downside, this accumulation that we talked about. Yes, brother, that's what we were talking about, right? Over here where we talked about the buys just like 5 minutes ago. So if you're in those, like from that area right here, your downside 8, 9, 10 points, and then that's your upside target, right? So now what you have done is, instead of, as I mentioned, don't take the breakout buys here. You want to take a breakout buy after you've had some sort of correction, either to this low or this low, and then you have more of momentum and range towards upside. So this would be your targets as you go into this intraday period. But keep in mind, just emphasize, we do have price action here. So if you're in a trade and you're riding this up, you can exit. You should take some profit as you approach this area, right? Just to keep that in mind as something as well, right? So this will just keep watching gold. So beautiful, beautiful win, guys. Round of applause for you. If you executed, you should absolutely give yourself a round of applause, like a big W to you, big W to everyone in here. And if you made money this week, man, another round of applause for yourself, because guess what? 97%, 95% of day traders straight unprofitable, not just for the time being, probably for life. And it's because they don't understand how the markets flow. They get angry, they sit behind their desk, they get angry, they yell at the market, they show resentment to their family because they're pissed they lost money. Like, bro, calm down, take a chill pill, go out, touch some grass, enjoy the nature, put your eyes into the sunlight, you know, get some vitamin D in them eyes. You look soulless right now, brother. You've been staring at the 30-second tick chart too long. Get out of it. Zoom out. Focus on the bigger picture. You're here for the next. If you really enjoy the markets, you should be here for the next decades. That's what I'm here for, right? Kevin, what about you? Don't you feel like you're going to be always looking at the financial markets?
Always, brother. Once you make it part of you, you never want to leave it.
Right? So it's like, dude, I want to build my character as a trader and as a person that's aligned with who I am as a trader 30 years down the line, not who I am aligned as who next week, right? The next week trader of me. No, every trade I need to take needs to be focused on, hey, is this the 40-year-old version of me will be taking in the financial markets?
Yep.
Someone who has now had 2 decades worth of experience. Is that someone who would be taking that trade? No, it wouldn't, right? Is this a trade that my 18-year-old self would or 20-year-old self would take? Probably. So I'm not going to take it. Yeah, I'm not going to take this. That's what you have to compare it to. Is this a trade that you would have taken 4 years ago when you first started trading? If it is, fuck, man, stay out of it. You know?
Yep. Bury me with my monitors. That's great, man.
Dude, I'm telling you, bury me in my monitors. I'm behind my desk like 18 hours of the day. So I love being behind monitors.
Bro,
But at the same time, like you gotta do other things throughout the day because you can't. Trading is so consuming, man. Like mentally consuming that you want to have an outlet for other things. Like for me, I get to work on my business. I get to build market. So even if I take a loss, let's say I take this loss. Oh well, I have so much other stuff I have to do in my day that I don't care about what's going to happen next in the markets. I'll come back tomorrow because opportunities are abundant. And that's the mindset you want to have, is that abundant mindset where it doesn't matter if you miss a trade, you miss a move. Look, you could have missed this entire move because let's say you only trade New York session. You could have missed this entire move, come to the charts, come to market in the morning, looked at our analysis. We showed you the bias, what the scenarios were, what we were looking for. And then we also broke down live price action and called out the entry, showed you, look, this is how you position yourself. And then also talked about don't buy this break up towards the upside. That's stupid. Now you're tapping into this wick area. You'd want to wait for a pullback either down to here where we have this accumulation right now, talking about, hey, maybe we get a break towards up and then we continue like this towards the upside. And if you're in a position here, you'd have your stop loss down here and then your target towards the upside, right? And then take profit some here and then move some towards upside there. So even besides that, like opportunities are abundant in the market. And if you just think that way, you're never going to feel FOMO. Look, the market, gold dumped from 43.75 to 42.22 all of yesterday and then pulled back 60%, where we then took sells again. So if you just have that mentality, you know that, hey, just like 6 hours later, there'll probably be another opportunity for me to execute on. So instead of FOMOing or revenge trading or just trying to sell every single pullback that's coming or every 5-minute candle because you think it's going to play out, just take a breather, take a loss, move on, just come back next session. Just come back next session. Or what you should do is just set a limit that if price comes to your next area, then that's where you'll execute. So that way you're not getting deceived by the market, and getting caught up in it. So gold, in my opinion, it's looking good to push down. This is a good first target, people. So I closed 60% of my position and I'm holding the rest of it. I'll trim some off over here as well, because this is what I want to see. How do we react to these FOMC lows? I'm not expecting, in my personal opinion, that we'll instantly dagger through these. What I think might happen is that if we see this push towards the downside, we get some sort of play like this, maybe even, didn't mean to do that. Maybe even in the intraday time frame, we get a pullback back to this, which would be good too, would be good to ride those sells down again. And it would, again, reinforce that as resistance, right? Now, this would be your roadmap or something for like an intraday period. But tomorrow, remember, keep in mind bank holiday as well, right? So we want to make sure that the profit that we make, we take it, we withdraw it, we put it in our bank account, we give some to our parents, we share the wealth. Drake has a lyric. It's like, if I don't share the wealth, how the fuck we supposed to grow?
Nice.
That's real, man. You have to share the wealth with people around you. And it's the more you give, the more you get. That's the mindset you need to have, and that's the abundance mindset. Do you know what I mean, dude? Like, and I'm telling you this from experience. I've had this mindset my like majority of my life. I would say since I was probably in my I was 15. I really started emphasizing it. Even when I had $40 in my bank account, dude. If I was with a friend and we were like in high school and we were having lunch and he didn't have money, dude, yeah, 100%, let's get it. I wouldn't care. Like, I would go down to zero before I didn't share what I had with anybody who was close to me. So the more you do that, the more you'll get in life as well. The more you give to people around you, the more you share value for free, right? I do this because I love the game, but at the same time, it's like I'm doing this for free. I know eventually the butterfly effect, something down the line, it will play out and I'll get blessings in return, right? So when you're a good person, you'll get blessings in return. When you're a generous person, you'll get blessings in return. It's like if God is looking down at you and he has a bag of blessings or or a limited bag of blessings to give, he's going to give blessings to the person who is living life with joy, is not angry with everybody around him, is a fruitful person, is a happy person, right? He's not going to give blessing to someone who's an absolute degenerate. Like, you see, you have to bring up others around you. So, guys, we're pushing lower. Great, great, great. There we go. There we go. Come on, man. Great positions, man. I'm very, very happy with how this played out. Beautiful profits to end the week. Honest, to start the week.
Yeah.
Yeah, I need to go do some squats, sitting on chair. Yeah, man. Today is also my leg day for me as well. I
Nice.
gotta go do a leg day. We're doing a webinar in a community today in the evening at 7 p.m. Myself and our head of partnerships, Nick, will be doing a webinar in a trading community that's in Australia. So there's about 300 people who have signed up to be there. So it's an exclusive webinar within that community, one of our partners. And yeah, I got a long day ahead of me.
Sadiq said, how do we send you our profits for to post on social media? So yeah, that's what I was saying, guys. Join our Discord, and you could just drop any comments, any screenshots in our general tab, and just
Yeah, that would be awesome. That would highly be appreciated if you guys join our socials and if you can post like your profits, and then it really helps us show it on the website. We'd love to showcase it on the website because at the end of the day, we're building a financial market platform that's with institutional data. Like we get this directly from Reuters, LSEG. We get our economic calendar from Reuters, LSEG. And like you can see, it differs. We have min max values, we have playbooks. So like next week, like actually, let's go to we even have NFP coming up July 2nd, but we have like PCE before that, right?
Yeah.
PCE minimum maximum expectations have been released yet, but when we get closer to it, like you'll see what the markets are expecting, what the banks are expecting for it. So all of this data that we have is full institutional grade data. This isn't a retail calendar, and you can open any of them, get a playbook on what this means for your market. So if you're trading initial jobless claims, if you're trading NFP, whatever it means for your market, you can check it out. So at the end of the day, that's our main focus, right? Building that platform that can guide traders through it exactly how I wish I had when I first started trading, dude. It took me 3.5 to almost 4 years of losing consistently. When people say, are you consistent? Yeah, man, I was consistently unprofitable for 4 years in the markets. So I wish I had something like this that could guide me in the markets, that I could take headlines and understand what's the actual narrative that's holding weight. That if something was, if there was like something being flipping the bias, like what's it actually flipping it? What does that mean? And what could hold more weight? So now when I have all this information, I can take successful trades and I can guide myself in the markets with ease, right? And take these like 1 to 6 risk reward setup that we just took. So join our Discord, throw us some screenshots and videos, whatever you need. And man, we're very, very excited. We're very, very happy and excited with the next phase of market. We have so much coming. We have so much coming, and you guys are really in for a treat. And for us, it's just incredible to see the growth of a community in this platform.
Absolutely, guys. And it's only up from here. It's only going to be more people from here. Show some love, show some support, share it with your truddy, your trade buddy.
You try.
Yeah, you ever hear that?
Thank you so much for sharing it and share your wins. Really appreciate it. You guys rock.
That's it. That's it. It's a community, guys. It's not just me in the lab, not just me and Jeev, Imre. It's a community. You guys are just as much of a part of it as we are.
Yeah, 100%, 100%. Thank you so much, guys, for joining us. I unfortunately have to cut. I have to leave now. I have a meeting in just 5 minutes. So if you have any more questions, feel free to drop them. What should I do now, man? Take some profit. Like, I hope you take some profit over here because these are the lows, right? And then just hold the rest of it. Like, hold the runner till down here. Take some more profit down here. See how markets react. Maybe again we pull back all the way back till here. Who knows? Maybe we pull back all the way here and this low remains. Set this to break even. Now you're risk free. You've taken profit on majority of your position. In my case, I took profit on 60%. I'm still holding 40%. If it comes to break even, oh well, I have another position from here. I have a very small position from up here still going. And either way, we're just riding the cells down, guys. That's it. This is the game. This is how we play. And if you're not playing the game, you're getting played by the game. So don't get played by the markets. Play the markets. Join us every day live on Market in the Morning, and that's it. And look at that, ES trade is still playing out. So good luck to anybody who took that. Good ES call there. Amazing call on gold. 300 points plus further downside target of 500. Man, we keep winning. We keep winning. It's like that Trump. What was it? So much winning. They're gonna say, "Oh my God, yeah, no more winning. We can't handle it." Yeah. Thanks a lot, guys. I gotta hop off. Kevin, I don't know if you want to sign it off now or if you're gonna stay on for a bit.
Yeah. We can sign off now. It's only
Awesome.
Yeah, absolutely, bro. Great stream. Thank you for being here. Appreciate you for filling in for Jeev today.
Absolutely, man. Absolutely. Thank you so much again for doing this every day from the kindness of your heart. See, this is what I mean, guys. Like Kevin's like, you know what? I gotta share the value. Kevin comes out here live every day, shares his analysis, his outlook on the futures markets, U.S. stock markets, CFDs, currencies, and man, he's a master of his craft too. So at the same time, I'm here learning from Kevin. You guys are learning from Kevin. We're all learning, and you guys are sending your analysis. You're taking the positions analysis we're calling, and that's what it's about. It's about community, man. In an age of AI, you don't want to be the guy who's dating an AI. All right, you want to be the guy who's surrounded by the right people in the right community, and we're fighting against the AI. We're fighting against it. We're using it, but we're fighting against it.
Yes, sir. That's it, bro. Guys, have a great rest of your day. Have a phenomenal 3-day weekend. No market in the morning tomorrow. New York session is closed. Volatility is going to be dead. There's no reason to be sitting in front of charts. Well, all that's going to do is sort of give you a mindset of, I got to take a trade. I'm watching the charts. I got to take a trade. No, take the day off. Enjoy the day.
Wow. Yeah, 100%. Exactly. End of the week too, man. Enjoy some profits. Take some out. Take your mom out for dinner or something, okay,
that's nice.
Give your parents some money for their mortgage or whatever it may be, man. Spread some blessings, spread some love. If you see a homeless guy, give him a $50 bill, man. That 50 goes a long way to him than it does to you. Even if you made $100 that day, man, give him a 50, because I'm telling you, the feeling that will give you is way greater than spending that 100 on some bullshit shoes or whatever.
Beautiful.
Spread some blessings, take the trades, always focus on your purpose and come to the markets with a purpose. Because when you do that, you're going to stop taking shitty trades. You're going to focus and hone in on absolutely wanting to perfect your craft and utilize platforms and tools that excel you and push you further towards greatness. So we'll end it off with that. Greatness is around the corner for all of us, my friends.
That's it, guys.
Let's have an amazing end of the week.
Awesome, bro. Nil, thank you so much for everything. Everybody have a great rest of your day. Keep your mindset right, and trading will follow.